Hello, hello, hello. Welcome to Newbie Investment Education. I am going to be talking about some regulatory and compliance issues in the note space, specifically as it relates to licensing. So let me share my screen here. All right, here we go. All right, so Uh, this information is as of May 2025 this year. I'm going to be talking about state licensing for mortgage note investors for performing and non-performing mortgage notes. So just a disclaimer, this information is provided for informational purposes only. It does not constitute legal, financial, or investment advice. Since these regulations often change, and this information may not reflect the most current laws and interpretations. So please consult a qualified legal counsel and verify the details with the NMLS or the applicable state regulators before making any business decisions. And as an important note, licensing requirements typically depend on the state where the property is actually located, not where the investor or note buyer resides. Okay, that's really important. So these are some states that commonly require licensing to buy mortgage debt. Okay, so there's the state of California, Georgia, Nevada, New York, Maryland, Oregon, New Jersey, Illinois, and then there's a couple of others, and I'm going to go into more detail on these. So let's do a little bit of in-depth state by state. So California, the license that they require it's called a California Finance Lender. Okay, the agency that you have to go through for that license is the California Department of Financial Protection and Innovation. And it is required for investors that are purchasing, holding, or collecting on or reselling residential mortgage notes, whether it's performing or non-performing, that is actually secured by property. Now, in the state of Georgia, you need a mortgage lender license. Okay, the licensing agency is the Georgia Department of Banking and Finance, and it's required for investors that are buying or holding residential mortgage debt, whether it's performing or non-performing, that's secured by a property that's located in the state of Georgia. Okay, and particularly if this debt buying activity is done habitually or as part of a business. And I'm going to go in more detail about that in a little bit. Nevada also requires a mortgage servicer license, even if the investor is passive and is using a licensed loan servicing company. The state of New York requires a debt buyer's license. And the same is true for the state of New Jersey. Okay. It's also required for buying, collecting on, or reselling specifically non-performing mortgages. The state of Maryland requires a collection agency license through the Maryland Commissioner of Financial Regulation if you are holding or collecting on non-performing notes on residential property. Okay, even a passive investor that is using a licensed loan servicing company is required to have that license. In the state of Oregon, you need to be licensed as a mortgage lender through the Oregon Division of Financial Regulation. And it's required if you're buying, holding, or selling residential mortgage notes that are secured by property. Now, there may be some exemptions for commercial notes on commercial property. We already talked about New Jersey. You need a debt buyer's license. High scrutiny in that state. We're going to talk more in detail about that in a little bit. My home state, Illinois, requires a collection agency license through the Illinois Department of Finance and Professional Regulation for non-performing loans that are secured by property in the state of Illinois. Connecticut is another state. You need to have a debt buyer's license through the Connecticut Department of Banking. All right. It's required for frequent purchases. All right. So let's kind of unpack this a little bit more. So the state of California, you need a lender's license through the DFPI if you are purchasing performing or non-performing loans. They are very, very strict, pretty much with everything, but especially with debt collections, they're very strict. Even if you're a passive investor and you board your loans with a loan servicing company, you are still required to have a license. Commercial purpose loans may be exempt. And we're going to talk about a little bit later what is a commercial purpose loan. All right. And then there's penalty for non-compliance. So if you go out and you buy a mortgage note on a residential property in California and you don't have this license, then you could receive a cease and desist order demanding that you stop doing business immediately. There could be fines, and they could even prohibit you from doing any business in the future in that state. Now, so update on California, actually, as of July 1st of 2025, the government signed AB 130 Section 2 into law, and it is retroactive, okay? It bars foreclosure on any second lien, any second mortgage in California, unless the current servicer, your licensed servicer that you're using, files a sworn affidavit confirming that it has reviewed the loan's servicing history and all of the borrower communications and have found no violations. Okay, so this applies to all residential 1 to 4 units, any multi-unit residential property, mixed use, and consumer, okay? And also business purpose loans, including home equity lines of credit, all right? So pretty much across the board, these are for second mortgages specifically, all right? A subordinate lien, which is a second mortgage, could be a third or a fourth mortgage. Those are subordinate liens. They are unenforceable if at any point any of these following 4 situations occurred. 1, the borrower has not been contacted regarding the loan for 3 years, okay? 2, if the servicer has missed sending out any monthly statements to that homeowner, okay, regarding their account, their monthly account statement. The third one, omitted ownership or servicing transfer notices. All right, that means that when a loan changes hands, there's an assignment of mortgage that should be on file with the County Recorder of Deeds office. If any of those transfer notices, transfer documents have not been filed and recorded, or if the lender or the investor has not sent out a letter to the homeowner informing them that their loan has been transferred, then that lien is going to be unenforceable. All right. And the other thing, the fourth is issuance of a write-off document, which is a 1099-C. Okay, so if any of those four things have occurred, that second mortgage is unenforceable. All right, you will not be able to you'll not be able to collect on it. You cannot bring any legal action. All right, and that is as of the 1st of July 2025. Now, let's move on to Georgia. Georgia requires a mortgage lender license with the DBF, Department of Banking and Finance. It's required if you purchase performing or non-performing mortgage notes that are secured by residential property in Georgia, especially if it's done habitually or as part of a business. Now, there's some kind of gray area type language here that you want to take note of. All right. So under key considerations here, Georgia requires a license if you buy residential mortgage notes as part of a business activity. Okay. Even performing loans can trigger licensing. Now, what it also says is occasional one-off transactions may be exempt. Okay, so you could buy one here or there. Okay, and those may be exempt. All right, using a licensed third-party servicing company and avoiding direct borrower contact may reduce your exposure. Okay, so that's important to always park your loans with a servicing company. All right, commercial purpose loans may also be exempt. And again, I'm going to explain what that means. And then there's penalty for non-compliance. So you'll see some states will have this kind of quasi exception language in there, where you see occasional one-off transactions may be exempt. All right, so this is something that you want to keep in mind, all right, for the state of Georgia. Now let's talk about Nevada. You need a mortgage servicer license in Nevada from the Nevada Division of Mortgage Lending. Is required if you're holding or collecting payments on a residential mortgage. It applies regardless of lien position, first, second, third, fourth mortgage. It does not matter. Even if you are a passive investor, you know, even passive investors may be considered servicers, all right, unless exempt. So this is one of those cases where if a mortgage note becomes available in Nevada and you're interested in it, one of the things you're going to want to do, and this is probably the case for any of these handful of states that require a license, is you want to send a quick email to an attorney that does collections, so a collection attorney that collects on mortgage debt. And I usually send out an email to, maybe 2 or 3, 4 if you want to. You can copy and paste the same message and send it to all 4 of them. And, provided nobody's on vacation or whatever, someone should get back to you relatively quickly and answer your question. Just say, hey, I'm a note investor and I'm considering purchasing a second mortgage in the state of Nevada, and I just want to find out, what I need to do from a regulatory and compliance standpoint. Do I need to have a mortgage servicer license? I'm only buying this one mortgage. It's a one-off. Is this something that I have to have for that? And let them tell you. Okay, don't guess on it yourself. Get legal counsel, get some good legal advice on that. All right, and it doesn't cost anything to send out an email. They'll give you a response. They usually don't charge for that, because it's just a general question, so so that's something to keep in mind there. The state of New York requires a debt buyer's license and possible a servicing license through the New York Department of Financial Services if you are buying or collecting on non-performing mortgage debt, okay, on property in New York. Very strict. New York and New Jersey, very, very strict. Even if you're buying notes for investment purposes, it may fall under this, meaning that, you know, you could be buying it through your retirement account or something like that. It may you may still have to get a license in order to hold that note in New York. All right. And let's talk about Maryland here. You need a collection agency license in Maryland through the Maryland Commissioner of Financial Regulation on non-performing residential notes. Okay, if you are holding notes or collecting on non-performing residential notes, you need this license. Even if you're a passive investor and you have a loan servicing company that is servicing your loans, that may still trigger a licensing event. Okay. Oregon requires a mortgage lender license through the Division of Financial Regulation if you are buying, holding, or reselling residential mortgage notes. Okay, there may be an exemption for commercial purpose loans or, again, occasional transactions. Okay, you see how this language is used, occasional transactions. So that could very well mean that, hey, if this is just a one-off note purchase for you, you don't have a full portfolio of notes in Oregon, it's possible that you could meet that exemption. Again, I would send off a quick email to a couple of attorneys, let them know my situation, and then let them tell me, what's required. Okay. New Jersey, very similar to New York. You need a debt buyer's license through the DOBI if you're buying and collecting on non-performing mortgages, okay, on property in New Jersey. High scrutiny, again, same as New York. You need to formally register as a debt buyer, okay. Illinois, you need a collection agency license from the IDFPR if you are collecting or collection or enforcement of non-performing loans. Okay, non-performing secured by property in the state of Illinois. Business purpose loans may be exempt, but it must be very clearly documented what the purpose of this loan is for. Okay. And then last but not least, Connecticut requires also a debt buyer's license through the Department of Banking for frequent purchases. Okay, there's that language again. Frequent purchases or collections of non-performing or consumer purpose mortgage debt secured by property in Connecticut. Okay, frequent purchases. Key considerations here: passive investment may be exempt if no collection activity is conducted directly. Okay, that basically means that you can send out informational letters, so forth, regarding the homeowner's account, but you are not doing any collection activity at all. You are relying on your licensed loan servicing company to perform those collection actions on your behalf. Okay, so passive investment may be exempt if you are not collecting directly from the homeowner. Now, North Carolina, I said last but not least, I forgot about North Carolina here. You need a debt buyer's license or you need to register as a loan servicer. okay, with this NCCOB. If you are collecting, servicing, or even just regular acquisitions, which is, buying residential mortgage loans that's secured by property in North Carolina. Second mortgages and non-performing mortgages are more heavily regulated than any other type of mortgage, whether it's performing or first mortgage. Okay, so very high level of scrutiny, um, much more heavily regulated for non-performing second mortgages. Okay, so definitely something to keep in mind there. For North Carolina. And then we have Washington. You need a consumer loan license in the state of Washington through the Washington Department of Financial Institutions. This is not Washington, D.C., this is Washington State, just as a point of clarification. It's required if you are buying mortgage notes secured by property in the state of Washington. Virtually all note buying activity, regardless of whether it's performing or non-performing, will trigger a license requirement. So in the state of Washington, if you choose to purchase mortgage loans in that state, you'll definitely want to have a consumer loan license for that. So, business purpose and consumer purpose loans. You've heard me use that term several times now. A business purpose loan is intended for commercial or business activities, while a consumer purpose loan is used for personal or household needs. Okay. The primary distinction is the intended use of the money. Okay, whether it's going to be used for business or personal. Okay, so as a more detailed breakdown, um, a consumer purpose loan, that's personal loan, family, household purposes. For example, a mortgage on on your primary home or second home, vacation home, a mortgage to refinance your home that you're, for your own personal use, not for renting out or, Airbnb or anything like that. Okay, this is your personal home. Um, Another would be consolidating personal debt. Some people take out a second mortgage for debt consolidation reasons. Okay, so that's considered consumer purpose. That's personal. Okay, financing a vacation or some other personal expenses. Okay, taking money out to put a kid through college, things like that. Okay, those are consumer purpose loans. Even if you were paying off medical debt, okay, that would be considered consumer purpose loans. Okay, business purpose loans, here are some examples. Taking out a mortgage to purchase investment properties, okay, rentals, Airbnbs, fix and flips, things like that. Another to finance constructions or renovations, not for the personal primary residence, but for income generating properties. Okay, that's a business purpose. Another example is funding expansion of a business, okay, or operating expenses for a business, or acquiring equipment to use in a business. Okay, these are business purpose loans. All right. So when a homeowner takes out a loan, it is very important to have some clarity, some language in that loan application or somewhere in that documentation that's going to say what is the purpose of this loan. Okay, and that's for this handful of states that I'm talking about now that requires a license. Now there's 40 other states that don't require a license, right? So we don't have to worry about that. Here, there needs to be for these states, there needs to be a clear statement of purpose for these loans. So, best practices across the board for nationwide compliance is to always board your loan with a licensed servicing company. Okay. Um, for all loan collections, this is what loan servicing companies are what keep you in compliance. Yeah, they do put this whole investment on autopilot for us, where we don't have to deal directly with the homeowner. We don't have to receive payments and all that kind of stuff. We don't need to do any customer service, and that's great. But the main reason for having a loan servicing company is regulatory and compliance. Okay, because we're buying mortgage notes all over the country, we don't know the rules for every single state. All right. So that is why we rely on loan servicing companies to keep up to date on these changes. So for example, with California, that was a change that came out July 1st, 2025. I received notice of that probably about almost a week after it went into effect. Not only did it go into effect, but it is retroactive. Okay, that means if I have notes that I bought on property in the state of California 5 years ago or 10 years ago, now I got to go to my loan servicing company. Well, their chances are they're going to notify me immediately. But they've got to let me know what I need to do in order to be in compliance and how much time I have to effect those changes so that I can meet the deadline for being in compliance. Okay, so that's what loan servicing companies do. They keep you in compliance. All right. Avoid borrower contact unless properly licensed in these particular states. Um, and always send out an email, just a quick email to an attorney in the state that the property is located in, and inform them of your situation. Very brief email. Again, I'm a note investor. I'm considering buying a non-performing second mortgage in the state of Nevada. This is probably going to be my only mortgage note that I'm going to be buying here. So it's a one-off deal. Do I need to have a license? Okay, very simple. And let them tell you. Okay. Um, Another thing about these states in particular, you want to be able to distinguish clearly between whether the loan is used for consumer purposes or business purposes. There needs to be some statement somewhere in that collateral that is explicit about the purpose of the loan. Okay, so that should be part of your due diligence if you're looking at loans in these states. The other, keep thorough documentation of your of loan purchase purposes and servicing arrangements. We're in the paper business. We're not buying property, we're buying paper. So it is very important to be organized, have your folders set up, not just on your computer, but your physical folders, and keep thorough documentation, okay, on everything. And last but not least, what I've been saying all along, consult a licensed attorney before scaling. Again, a lot of these states like Georgia, they kind of have that gray area language that says, as long as you don't buy too many nodes in the state, you'll be okay. So you just want to make sure that you are in compliance and that you're checking. So so that is pretty much it. I want to give credit to Jamie at Labrador for sharing a lot of this information that I'm sharing with you. And the other thing I want to say is that um, you can, let me stop sharing. You can choose whether or not to invest in buy notes in these states or not. If you choose not to, there's 40 other states that you can buy mortgage notes in. Investors typically have a, should I say, different viewpoint on the whole licensing thing, right? They may say, you know what, since most investors, note investors, are not going to want to get licensed in the state of, Nevada or Oregon or wherever, I'll get a license there, and that means there'll be more notes for me. Okay, because investors are not going to buy those notes because it's in a state that requires a license. I'll pay the $1,200 or, whatever it is to get licensed, and then I will make that one of the states, that I will, buy notes on a regular basis, and build my portfolio. All right. Other note investors, they may say, you know what? I'm just going to buy from the 40 other states. Okay, I'm going to leave these 10 states alone, or however many there are. I'm going to leave them alone, and I'm just going to focus on the other ones. And that's absolutely fine. Okay, you as an investor determine your own investment criteria, what you want to do. Okay, so, and all of us have to do that. There's absolutely nothing wrong with that. So, um, if you have any questions about licensing or servicing, please feel free to put those in the comments. I'll be more than happy to answer any questions that you may have regarding licensing, okay, or servicing or anything like that. All right. I hope this has been very informative. Okay. And that'll be all. Take care.